When it comes to gold, there's no ongoing cost, to be honest, not lots of cost there. Let's look at properties. And again, when it comes to property, you own the asset yourself. I'm not saying I'm going to change my mind in the future, but for now, I'm looking for asset that can make me money passively while asleep. Hello and welcome. In this video, I'm going to share with you the two type of investments that people are that most people look into. Some people look into gold and houses. So I would like to share what are the differences and basically what are the pros and cons on investing in both investment, or I could call them assets. Gold versus houses. Gold versus real estate. So let's look at it in a fine line because they're both great investment products. But it's important for us to understand what the pros and cons in investing. So let's start about the purchase process, okay? Gold is kind of a bit easy to buy. You don't have to kind of go through so many hoops and bumps to buy it. And you can literally go on the trade market and you can buy gold that way, or you can actually buy the physical gold by visiting a shop or visiting a jeweler to kind of give you the gold, or you can actually work with a miner who would actually help you get the raw gold, and then obviously that's how you could buy it. In contrast, when it comes to buying properties or real estate, it goes through a process. You'd have to go and see the property and then obviously see if it's something that you like, negotiate on the property, agree a price. Once you've agreed the price, then you instruct your solicitors to kind of do the due diligence side of things, checking whether the property is owned by the person who said they're selling it, and checking if there's any restriction on the property. In a general, they check how good that investment is in terms of the structure and the ownership side of things, right? So it goes through that process. While that is going, you also need to raise finance to kind of buy the property. And if you're buying properties in the UK, you'd have to have minimum of 25% in order to be able to buy the property. And again, you can buy £100,000 property for about £25,000. And obviously you have your legal cost. And then once you've done all that, then obviously once you've got your 75%, you got your 25%, you put that together, give it to your solicitors, and then the solicitors then actually pay the owner, and then the owner then transfer the ownership of the property to you. And again, you don't have to physically do that, but the solicitor would actually help that process go. And again, in average, it takes about maybe 2 to 5 months, depending how long your solicitors are good in doing property deals like that. You could take around that time to be able to purchase a property. But if you got a good solicitor, it normally takes maybe 4 to 8 weeks. But in average, that's how long it will take, especially if you're buying these properties when they're already done up nicely. So that is the purchase process, okay? Gold is very easy to buy, and then obviously property is very it's not hard, but it's a process basically in order to buy that property. So that's one of the two differences. And the second difference is ongoing cost, okay? When it comes to gold, there's no ongoing cost, to be honest, not lots of cost there. So I think the only cost you could, if you own the gold, if you own the physical gold, for example, you have to find a place to store it. Okay, storing the gold, you have to literally store it in a secure place so nobody will nick it away, and you have to check in on it as well just to make sure it's there. So that is the kind of ongoing. And then if you're one of those who likes to make sure your investment is secure, you may take insurance for it as well, or you can take it and get some companies to kind of keep it for you, store it for you. I can't remember the name of these banks that literally stores gold for people, but basically they can store it for you, and then you can then pay them fees to keep your gold for you. Let's look at properties. And again, when it comes to property, you own the asset yourself, right? You are responsible for the repairs, you're responsible for the maintenance, you're responsible you also pay management fees, and obviously you are responsible for the upkeep of the property. Now, the distinct differences are, with gold, you don't make money whilst you've got the gold. You're keeping the gold back in the hope that gold prices would go up at the time you're selling. So, i.e., gold doesn't make you residual income. It doesn't get you money every single month. You just have to keep it there, hoping that the price would go up, and then whenever you sell, you then make your money that way. In contrast, when it comes to properties, it makes you money in two ways. It makes you money from renting the property, i.e., the cost I've just mentioned, the management cost, repair and maintenance, you get that money paid from the rental income you receive. Because what would happen, your tenant would pay you rent. Out of that rent is where you deduct the expenses. So in essence, you're not paying for the expenses, okay? The expense is there, but you're not paying for it, okay? You are getting that money from the tenant. And the second way you make money is basically by something we call capital appreciation. Because property prices goes up, you'll be making money that way as well, similar to gold. Gold, you're banking that your gold price would go up and then eventually sell it and make money. Properties also is kind of the same thing. You're buying the property, you're hoping that the price would go up, and in average property prices goes up by 7.5% in the UK. So in average your property price would be going up that way as well. So you make money in two ways: cash flow and capital appreciation. Whereas when it comes to gold, there's no cash flow. You're only banking on capital appreciation, and obviously it costs you to keep the gold as well. That then eats into capital appreciation as well. Whereas when it comes to properties, basically is going up and you've got someone paying for your debt, the interest you paid to get in that 75%, and then obviously you've got rental income coming in every single month. You'll be making anywhere from 300 to about 400 if it's a single buy to let property, and you don't have to do anything to make that money. That is the distinct differences between those two assets. So it is up to you now to think: do you want cash flow coming in whilst your asset goes up, or you just want an asset and then you sell it on if the prices goes up? So that could be another way to kind of think about it if you're buying it. So I love properties for that reason, basically for the cash flow. It gives me cash flow whilst the property prices goes up, and then obviously it gives me appreciation as well whilst the property prices goes up as well. So these are the benefit. And again, with property, you don't have to pay to store it, right? You don't have to literally worry about someone is going to nick it, run away with it, and you don't have to keep it in a vault. The vault is the word I was looking for, where they can store your gold, and you don't have to kind of do so many stuff like that. When this property is there outside, you can walk past, you can drive past, you can kiss, you can hug it, you can literally live in it as well. So you don't pay that cost, and any cost associated to that property is being paid for by your tenant. Especially if you know what you're doing, you bought the right property, right? You'll be making money that way. And again, that's the reason why I love properties. I'm not saying because I love property I don't buy asset like that. If you build your property portfolio, start making lots of money, you can actually start buying gold just to protect your investment. Okay, so you can say, okay, if properties that doesn't work for me, I've got gold. That's what we call diversification. You can diversify into gold. But for me personally, I like making money in two ways: cash flow and appreciation. And that way then I'll be build my wealth quicker and quicker. And in the future, if I want to buy gold, I'll buy it just to diversify. Okay. And then let's talk about taxation as well. When it comes to tax, in most cases, if you invest in gold, it's very tax efficient as well. Gold is very, very tax efficient. You don't normally get charged on tax and all that sort of thing. So that's another benefit you get. Whereas when it comes to property, obviously you get taxed on your net profit, and again that will depend of your overall income. And again, even if you're making even if you get taxed, you're still making your cash flow anyways. It brings that return on your investment. So you may be thinking, what is the conclusion, and what do I prefer at my current age? For me personally, I'm young, right? I will invest a lot more in properties because I want a great cash flow and obviously capital appreciation along the way. Maybe when I hit my 50s, or maybe when I hit my 60s, I'll consider having gold as a safer form of investment. Both are safe, by the way, right? Both are really, really safe. But with gold, then you've got the gold there and all that sort of thing. And also, with gold, you cannot borrow money to kind of buy gold from the bank, because the bank will expect you to be able to make income in order to be able to pay them back. So again, if you want to buy gold, you have to have the actual money. If the gold worth 100,000, you have to have 100,000 to buy the gold. Whereas property, if you're worth 100,000, you only need 25%, 25,000 pounds to buy the property. So for me, I prefer property at the moment. I'm not saying I'm going to change my mind in the future, but for now, I'm looking for asset that can make me money passively whilst I sleep and whilst I watch the asset grow. So to conclude, I would prefer properties right now maybe when I hit my 60s, I will start investing in gold or start storing gold. If you like this video or any of my videos, don't forget to hit the like button below, subscribe to my channel for more amazing tutorials. And again, if this video is making any sense, don't forget to share it with friends and family and smash that like button so the YouTube can push our videos up there so you can reach more and more people.